most of earnings out. But of course, the biggie there, Telstra, what did you think?
Telstra coming in on expectations, so $1.59 billion profit. That was up by 8.6%. And the market reaction for Telstra is going to be an interesting one. It really sets the tone for some of the other defensive stocks in the market. We know that defensives have run hard over the last 52 weeks, and this is the first out of the big yielders to really come out with results. It's come in on expectations, so it's going to be interesting whether the market uses this as an excuse to switch into perhaps some of the cyclicals, or we do see continued support for these high yielders. Telstra is a stock that's up by 34% over the past year, and of course what's been driving that is its very attractive dividend. They've come out to confirm that 14-cent dividend once again, so we should see some support for the share price. But importantly, while we've only seen sales revenue up by 1%, one measure that we watch very closely with Telstra in regards to its ability to pay dividends and also increase dividends is free cash flow. And free cash flow actually jumped by 20% to $2.2 billion, and that could signal that Telstra is able to raise its dividend in the future. So that's a positive there. No real surprises. We saw the growth coming from mobiles as well as broadbands and network applications and services. So there were the growth areas, and that of course was offset by fixed lines as well as sensors. So I don't think any huge surprises. Mobile's still driving this business, watching free cash flow, and that jumped by 20%. And of course a positive catalyst for Telstra is if we saw a rise in that very attractive dividend.
Thanks. Let's talk the trading update. Given market conditions, Julia, are you optimistic on these set of numbers that the NAB is kind of forging ahead, irrespective of its problems offshore?
It's a beautiful combination when you see a bank come out with increased revenue and decreased bad debts, and that's really the type of combination that you want to see. NAB has been a trailer out of the big four banks, and that's because of its UK operations. But in this particular quarterly update, what we saw was NAB growing above system growth, its core Australian portfolio performing very well, and on top of that we saw improved earnings from its UK operations. We know that the main problem in the UK are the troubled commercial property loans, and we did see a rundown of that portfolio to the tune of £300 million. So it does look like the rundown of those troubled assets in the UK continues. Of course, the ideal scenario for investors in NAB would be that they sold their UK operations at a good price, but NAB flagging that they're not willing to sell at a fire sale price. So it does look like we're still going to have to wait there. NAB in the past year still has done relatively well compared to the market, up by 21% in the last year, even though it has trailed its peers. We've seen the likes of CBA and ANZ gaining 27%, and Westpac's been the leader there with a gain of 36%. So all up in terms of NAB, a positive catalyst. It seems to be that brokers have become a lot more positive on NAB in terms of a valuation basis, and it's really closed that gap in terms of share price performance. It was a very big underperformer, more in the teens, but now we are seeing a return in the 20s for National Australia Bank, and of course that positive catalyst would be a good price for the sale of its UK assets.
Look at a stock that's dual listed. This is News Corp. Shares were sold off and after hours trade in New York. They're losing about 3.7% here. Some catalysts for the selling, if you could, given we got a beat on the revenue front, did we not, for the stock? And in terms of quarterly revenues, doing very nicely.
When it comes to stocks, it doesn't matter if the company's growing profits by 20% or 50%. It's all about expectations, and News Corp unfortunately has come in below expectations. It of course is also listed in the US, and we did see a sell-off in the US market, so we are expecting to see the same on the Australian share market today. If we have a look at what's been a key driver of News Corp over the years, it has been the cable business, but it does look like costs now rising. So News Corporation
Business there, Julia, shares are pretty steady at the moment. It is warning about operating expenses increasing in the second half. What do you think about Tabcorp?
This is a business that's undergoing a fair bit of change at the moment. Not only that, but the market that it operates in is a mature as well as a highly competitive market. If we have a look at that gaming market, that online space is becoming extremely competitive. Offshore players are coming into the game as well as onshore players trying to grow organically. So it is quite a difficult area that Tabcorp operates in. Having said that, we are also seeing changes in its underlying business. We know that the Victorian gaming licence ran out in August last year, so the loss of revenue and the loss of profit from that. It has managed to retain its wagering licence in Victoria for another 12 years, but no guarantees after that. The actual headline figures look pretty ugly. Net profit down by 62% and revenue down by 26%. But if we strip out the loss from the discontinued operations on a continuing operation basis, revenue was actually up by 2%. So that's a positive that we are seeing revenues growing there. But it is an extremely competitive area. Having said that, one of the real positives for Tabcorp coming out today is that it has retained that 11-cent dividend. And that means that this is a stock with a yield of 7.8%. So while its underlying business is in fluctuation, it does have an attractive yield. But I'd be a little bit cautious on Tabcorp. We are seeing lots of changes in its business, and it is a very difficult market that it operates in, a very mature as well as a very competitive one.